Walk you guys through this trade where I made $85,000 in under 24 hours, almost breaking my record if I would have just set and forget a little bit more, but you know, but it's okay. So I'm gonna walk you guys through from the moment that I analyzed it on Sunday swings to all the way where I entered, where I placed my stop loss, where I entered, where I put my take profit, everything. I'm gonna walk you guys through the whole entire trade, so make sure you guys pay attention. So the first thing when we go to the market we already know is we identify the trend. Where is the trend going? You guys already know, I said this earlier, the trend is your friend. You wanna go wherever the majority of the markets are going. So if you notice here, we have the weekly time frame is bearish. So as you can tell, this market structure is headed to the downside. Lower low, lower high, lower low, and then this is where we potentially created a new lower high, obviously if we end up breaking under. So right now we can tell the weekly is bearish. So yes, I do this for every single trade, because if you're not holding yourself accountable to mark up your charts and follow your trading plan, then who is? Nobody's gonna be behind you while you're trading and be like, hey, make sure to do that. So this is where a lot of traders, they fail and they just end up losing because they don't hold themselves accountable. I literally do this for every single trade. So weekly time frame is bearish. Then we go down to the daily time frame, and as you can tell, the daily time frame went from being bullish to being bearish. So we were here creating higher highs and higher lows, to then creating lower lows and lower highs. So at the time of us taking this very trade right here, we were bearish. As you guys can tell, you have here daily time frame bearish. So this would be the lower high, and then this would be the lower low. Because this is the higher high, this is the higher low, we then broke the structure. So this time frame here is now bearish. So actually this would be the lower high, and then this would be the lower low. So at the time of us taking this trade, this is exactly what it looked like. So after we identify that the daily is bearish, then we go down to the 4 hour. So on the 4 hour, we would do the same exact thing. And as you guys can tell, the 4 hour structure is also bearish because we were creating higher highs and higher lows, and then we shifted to the downside, making this time frame bearish. So the lower low would be here, and then the lower high would be here. So as long as we remained under these two lines, literally we can do here whatever we want, we are bearish. The moment we body close above, we go bullish. The moment we body close under, then this turns into the new lower low, and then this turns into the lower high. So this is where we would then identify that the 4 hour is bearish as well. Meaning we have 3 time frames in sync. All time frames are going down. Why would you be interested in buying on the 1 hour time frame or 38-minute time frame or 15-minute? It is a waste of time. You only want to take a trade where the majority of the markets are going. This is what I express every single Sunday when I get on the call with the students. So as you can tell here, the weekly time frame is bearish, the daily time frame is bearish, and then the 4 hour time frame is bearish. The only thing that makes sense is to sell. So if we're only looking to sell, we're gonna only find an area of interest to sell. So now this is where I only look for my areas of interest on the daily or the weekly area of interest. So as you can tell, I found this zone on the daily because we need a minimum of 3 touches to find our area of interest. This is where we have area of interest, touch 1, touch 2, and then touch 3. So we have 3 touches on the area of interest, making this a solid area of interest. Whenever we are above, we're buying. Whenever we are under, we're selling. Whenever we are above, we're buying. Whenever we are under, we're selling. So in this case, not only are we under the area of interest, but all time frames are heading down. So it's like you're setting yourself up for success right now. So after we understand that the 3 time frames are in sync, my next confluence is we are selling at a daily area of interest. Again, I can only identify an area of interest if we have a minimum of 3 touches. So this right here, the way that I grade it is that every time frame is a 10% towards your grade in terms of trend. So this right here, this is going to be 10%. This is going to be 10%. And then this is going to be 10%. So let's say, for example, that the 4 hour would be bullish. So let's just suppose that this is bullish. like this, then this would only make this trade a 20% because we only have 2 time frames in order to take the sell. Let's say you want to take the buy for whatever crazy reason, then this would only be a 10% towards your grade because you only have the 4-hour bullish. Again, I only identify trend in these 3 time frames. Everything under here is simply for entry signals. So obviously we're not looking to buy because that makes no sense. We want the majority time frames in our favor. So this is where we have the 3 time frames in sync, giving us all 3 time frames together, giving us a 30%. If we're buying or selling at a daily or weekly area of interest, this is where I would then add also a 10% to my grade. And this just goes on. My strategy and my confluence just go on for a series of like 10 different ones where I end up giving a grade to the trade where then I can basically identify whether it's going to be a B setup, C setup, A setup, and I usually don't take any trades under a C. By the way, I graduated high school with a 2.57 GPA, which is a C in America. That is fine. I take a C to my mom and she's happy. She's phenomenal. So I'm gonna take trades that are C+. Anything under makes no sense. So I'm just applying the same thing. So as you guys can tell here, after we identify that we have our area of interest, this is where I would then go down to the 4-hour. In the 4-hour, I have to wait for it to touch my area of interest. Once we come to our area of interest, this is where I can identify, wow, we're having a rejection from EMA, rejection from structure, let's just put here, from 4-hour structure. We also have a, we also have a 4-hour rejection candlestick, so on and so forth. So if you notice, we're building a series of confluences to take the trade. So then this is where I would wait for the session to hit, whether it's New York or London session. After here, this is where I entered the trade on the 30-minute time frame on this bearish engulfing and on this potential left head, right shoulder. So this is where I would come here and I would just add 30-minute bearish engulfing. So the confluence 6 would be 30-minute bearish engulfing. 7 would be head and shoulders. 8 would be rejection from 30-minute EMA. Like, you see how I'm building a series of confluences? And again, keep in mind, all of these confluences have a certain grade towards the trade. That is exactly what I break down and I explain in my set and forget strategy. So this trade right here, after I identified my entry point, which is going to be after this bearish engulfing, I put my stop loss above the right shoulder, because again, we have left head, right shoulder, and I'm gonna be fully transparent and completely honest. This was a very tight stop loss. I usually have my stop loss above the head, because again, this right here, this could have decided to have created a larger right shoulder to then keep going to the downside. But since I saw such a strong 30-minute bearish engulfing with taking the trade at 8 in the morning, as you guys can tell down here, here's pretty much, again, setting yourself up for success, because you know New York session is about to kick in. So there's a lot of momentum that's gonna hit this trade. So this is why I had my stop loss a little bit tighter on this trade. And this is where I identified my take profit on a daily zone, because again, I am a swing/intraday trader. So if I am using the higher time frames to identify the trend, why would I place 4-hour or 1-hour take profits? It's kind of, you're leaving so much money on the table. So this is where I would enter on the 1-hour, 30-minute, 4-hour to look for my entries. And then my take profit is based off of the next structure point. So this is where I come here on the daily time frame, and I notice the next structure point has this solid zone right here where we have 1, 2, 3, 4, 5 touches, and I just found the next round psychological level, which is 8,900. I usually like to get out right before it hits the round psychological level, because usually what happens is that you have this exact situation here where it tapped it barely to the T. So I ended up closing this trade not fully at my take profit, and obviously some brokers aren't gonna hit it because, you know, spread and stuff, but my actual trade profit ended up hitting somewhere around here, because I just more than I needed, because I need a minimum of a 1 to 2 risk to reward to take a trade. I don't really need